So basically, SEBI has asked the Bombay Stock Exchange to pay their regulatory fees based on the annual turnover of the company and considering the notional value of contract. Now, post this, it makes the company possibly liable to pay 165 crores based on their calculations. Now, Jefferies has downgraded the stock rating to a hold from a buy with a price target of 2,900, which implies a 10% downside. Now, derivatives make up 40% of BSE's FY 25-26 profit after tax, and the higher fees could hit the EPS by 15 to 18%. Then we have Investec, which has rated the stock into under review from a buy earlier, and the SEBI's directive could lead to the profit before tax to be impacted by 17 to 18% by FY 25 and 26, according to the brokerage. Now, BSE could either offset the impact by taking price hikes or even take a one-time provision of 96.3 crores in FY 24, according to the brokerage. And lastly, we have IFL. They've maintained their buy recommendation on BSE, but the target price for BSE has been cut to 2,550, which implies a 20% downside.
Right. So that's the word on BSE. Fair bit of weakness there. Sudeep, let me come to you for your last calls. And would they focus on anything in the banking space? I want to talk about AU Small Finance Bank for a second and pull that up pre-market as well. Guidelines for small finance banks to transition to universal banks could be a positive for AU Small Finance Banks. Any of these you like, specifically AU?
Yeah, so if you see AU Small Finance Bank, it was in a downtrend, but last few days we've seen the momentum on the downside slightly reducing, and now this news that has just come, I guess that could act as some kind of a positive trigger for this stock. And overall now, till the time the stock holds 610 range, it could head up higher up to 650, 660 on the upside, where there is a gap that was created on 29 Jan. So I guess short term it is a positive, but from a medium term to a long term standpoint, 665 on the upside needs to cross and sustain.